When we're in a really tough market,
Sure.
being competitive on the buyer side is obviously the most important thing. And so now I'm closing purchase loans, conventional FHA purchase loans in 14 to 16 days.
Wow.
Exactly. So there's a
Wow.
big difference there in terms of competitiveness. And then also when you add in a grant, we're looking at 30 days.
Yeah.
So it definitely changes the competitiveness for me and the value that I can bring the agents or to my agents.
Yeah, it could certainly be more attractive for a seller if they need a quicker closing rather than waiting for the full 30, 45 days that's customary in our business. Hey, what's going on, everyone? It's Tim here with the TMA Connection podcast, brought to you by Cummings & Company. And today we have a great interview. Lots going on in the real estate market and lots going on with mortgages. And we brought in a very special guest. His name's Tyler Spencer. He's with Meridian Bank. He's been in the mortgage business for 5 years now. Good-looking young guy. Good-looking young guy, but don't let the age fool you. Super sharp. Online testimonials are like gold, and people are really hyping you up out there. And so without further ado, I'm not going to go into any more because you're going to give everybody a little bit of an introduction as to who Tyler Spencer is. But hey, man, welcome to the show.
Thank you for having me, Tim. I really appreciate it. So yes, I'm Tyler Spencer with Meridian Bank. As Tim said, I've been in the business for 5 years, and I've been all over the place in the business. I've worked for banks, I've worked for brokers, I've worked for mortgage companies. So I've seen a lot of the different, options and perspectives that, each, a channel has for mortgage lending, and they all have their different pros and cons for sure.
Okay.
And after all that, that research for the first 4 years of my mortgage career, I've found that, working for a bank is definitely the best platform for me and my clients. And that really just puts, the highest customer service, with the best pricing possible. And that's, the biggest thing for me with my clients. And as you had mentioned with the testimonials, my clients are the biggest key to my business. Happy clients, when they're out there yelling your name at the top of the rooftops.
Yes, sir.
That equals referrals. And, we're in this business for referrals. We don't, pay for leads. We generate them. And so, good testimonials are key for all of that.
Yeah.
And so that's a big thing.
What's setting Meridian Bank apart from everywhere else that you've worked?
The biggest thing for me is definitely the communication and the support and the staff there.
Okay.
So we have great rates. When I've come to Meridian, it's a completely different platform. There's a lot more communication between the processors and the loan officers and underwriting.
Yeah.
The big thing is if there's an issue on a loan, when the underwriter calls it out, I can call that underwriter directly and be like, hey, how can we work this out? Whereas a lot of the other places I was at, you had to talk through your processor to the underwriter. The underwriters didn't want to hear from the sales staff.
Interesting.
So that was a big thing. But the other big thing is the closing timelines. Closing timelines, like I said, were 30, 45 days. Pretty much everywhere else I've worked. And that's, the norm per se. But when we're in a really tough market, being competitive on the buyer side is obviously the most important thing. And so now I'm closing purchase loans, conventional FHA purchase loans in 14 to 16 days.
Wow.
Exactly. So there's a big difference there in terms of competitiveness. And then also when you add in a grant, we're looking at 30 days.
Yeah.
So it definitely changes the competitiveness for me and the value that I can bring the agents or to my agents.
Yeah, it could certainly be more attractive for a seller if they need a quicker closing rather than waiting for the full 30, 45 days that's customary in our business.
Exactly. Yeah. And so with we can compete with cash offers in that sense. Not necessarily that a financed offer is better than cash, but if cash is $10,000 lower than my financed offer, and we can close in the same day, at the same timeline, and then we're very competitive with that. So that's been a big, big difference. And also the down payment assistance.
Okay.
That's the big thing with Meridian. That we have so much down payment assistance available.
Yeah.
No longer is not having a down payment an excuse to not buy a house. There's just so much money out there available.
Yeah, and we're going to talk about some of those programs a little bit later because a lot of the people that I work with are first time home buyers and certainly these things can help you in that buying process. So awesome. So over this past, let's say 6 to 12 months, you know, it's been a challenging market out there.
To say the least.
To say the least. It's been a challenge, nothing that we can't handle.
Yep.
But what have you been seeing on the mortgage side that you've been having to do? What challenges have you been facing, and how have you been facing those challenges with your clients?
So I would say the biggest thing is getting buyers under contract, because a buyer will see a house and want to go see it. Let's say, for example, it's listed for $350. Odds are it's going to go for $360 or maybe more, and so it really you have to get the buyer in the mindset of paying over ask.
Okay.
And so we're seeing a lot of that. And I have a buyer right now, for example, in PG County. This woman's been trying to buy a house for the last, I would say, 4 or 5 months now. Probably put in 4 or 5 offers, all of them at least $20,000 over asking.
Okay.
But we're also asking for seller credit, so it makes it a little bit more difficult, but she's not having any luck.
Yeah. Okay.
And so that's a big thing that I've been seeing, across the market for the last 6 months is, prices are high and competition is still high regardless of the interest rates.
Yeah.
Still seeing a lot of offers on houses, with 8% rates. So that really just tells me that we don't have nearly enough inventory on the market.
Yeah, that's what we're seeing on our side is a low supply, still high demand. I think back in COVID when the rates were down to 2% and 3% like that, we were seeing maybe 20 offers on a house.
Oh, absolutely.
Now, you could maybe five to 8, I think, is kind of like the average there on a house that's priced right, presents well.
100%. I agree.
Yeah. So it's definitely an interesting time. And what are you now doing in your business to push through this high interest rate time?
Yeah, honestly, it comes down to all the little things that you're supposed to do, but that you didn't necessarily have to do in 2020 and 21. And for some people last year, the business kind of just came to you.
Yeah.
This year, it's all about getting back to the basics and doing everything that all the little things, following up with people, every day, making your cold calls, touching your closed database, putting your Popeyes together, anything that you did to get to where you're at. And you kind of stopped doing because the business was like crazy in 2020.
You're just so busy and you didn't have to do it.
Exactly.
Yeah.
You have to go back to doing all those little things again, right? And consistently doing them. Consistency is the biggest thing that is important to my business.
Yeah.
It's not necessarily just waking up and being like, oh yeah, I'm going to call 10 past clients today. It's consistently saying I'm going to call 10 past clients today and to try to get business out of it one way or another. Yeah. And so it's all about the little things and doing those right again.
Yeah. We're really trying to focus on just bringing as much value as possible, because when things do subside and interest rates will go back down, because everything is cyclical.
Yes.
And what goes up has to come down. It's just, when will that happen?
Right.
But when that time comes, the people are going to be feeling more comfortable and educated in what's going on.
Yes.
Yeah.
100%. And I think it's a good opportunity for people who are in the business right now and who plan to stay in the business, especially on the mortgage side. I read an article from the Mortgage Bankers Association that said at the peak of the business in 2021, when rates were 2.5%, there was 180,000 loan officers in the country. And by the end of the year, there'll be 80,000 left.
Wow.
So that's about a 60% decrease in the amount of loan officers out there.
Yeah.
By the end of the year.
Right.
So the loan officers who stay in the business, there will be a lot of opportunity for them, to take over, where the guys who got out of the business, guys or girls who got out of the business, their agents, their referral partners will now not have a loan officer.
Right.
So I imagine it'll be very similar on the real estate side, where there's a lot of agents getting out of the business because there's just not enough business to go around right now, and people got to pay their bills. And so I don't ever root for the failure of anybody.
No way.
Absolutely not. But there is a good opportunity for those of us who can weather the storm.
And put in the work, right?
That's exactly it. That's the only way you are going to weather the storm.
Yeah, 100%. And what drives me crazy is people are posting out there saying, it's about time that we get all the weak people out of the industry. And it's like, well, who are you to say that somebody's weak, right?
Yep, exactly.
I mean, when I got into the business in 2015, we had to start from nothing and grow. And what what if I was considered the weak one,
Right,
or
exactly.
whatever, we grew the business and we did
Yep.
right by people and stuff like that. But who are you to try to build your own building by taking other people's bricks?
Dude, 100%. Ended up meeting a loan officer named Ed Navarro. God love him. He passed
Yeah.
away. You know Ed?
Yep.
Ed passed away in
Unfortunately.
February 2019. And from, I would say, January 2018 till he passed away, we worked together. But he brought me over onto this side of the mortgage business to where you kind of work for yourself. Yeah, I work for Meridian Bank.
Yes.
But they don't pay me a salary. They don't give me leave. They don't give me anything. They gave me a job title and said, go bring us some loans.
Right.
And so that's how I've been brought into this business. And, I started from nothing as well. You know what I mean? The first year I think I did $500,000 of loans,
Okay.
which equated to $5,000 of commission. So in the whole year, I made $5,000 of my
Yeah.
own commission. Now I was helping Ed, so he was helping me out.
Okay.
But the only reason that worked out for me is because I still lived at home with my mom and dad. So I had that opportunity, that stability per se, to take that risk to get into this business. And with, when people are saying, all the weak people are getting out and all that, it's not about the weak people. They just don't have the opportunity to not make any money.
Yeah.
And that's the toughest part about it. And I think it's really unfair that people do say things like that.
Yeah, absolutely. Yeah. Don't build yourself up by breaking other people down.
Exactly.
Yep. So moving into 2024, I think it was like 90 days or something, 100
Something
days,
like that, yeah.
somewhere around there. And then it depends on when this comes out. Right now we're speaking in October, so we got about 2 more months before we hit the new year. What are the mortgage professionals predicting as we move into the new year with interest rates, with the housing market? What are we looking at?
I think a lot. It goes back and forth all the time based on what economic data that comes out. Like today, we had the non-farm payroll number come out, and I think we were expecting about 170,000 increase.
Okay.
And it was more like $336,000 increase. So there was a big increase in non-farm payrolls. However, that's not necessarily a good sign for the economy. It sounds like it is, but as of right now, the Federal Reserve is trying to take money out of the economy and to lower the inflation. So that's kind of what's all going on. And so it goes back and forth. But I think 2024 is going to be another tough year. I think it's going to be very similar to 2023. We're going to have volatile rates. Rates are on the higher end of the scale right now, closer to 8%. But I think we'll probably see that same range between, in 2024, at least early 2024, I think we'll see rates still between 7 and 8%. And then, as long as things continue to improve economically speaking throughout the year, we could see things improve.
Okay.
But I don't think we'll see any improvements until at least the second half of the year, third quarter, fourth quarter.
Well, we do have an election year next year.
Yes.
How do election years play into the market like this? Does it have an effect on it?
Theoretically, no, it shouldn't. Theoretically, it shouldn't, at least when it comes to mortgage rates and the Federal Reserve Bank. They say they have they don't lean either way. They want to be completely separate from election years.
Okay.
But what I think will happen is next year we won't see the Federal Reserve raise rates.
Okay.
They won't do anything. They won't lower, they won't raise, they won't do anything because it's an election year, and they don't want to be seen as like, if they lower rates, then they're seen as by the public as trying to help the
whoever's in office.
Yeah, whoever's in office stay in office.
Yeah.
And if they raise rates, it's vice versa.
Gotcha.
So they want to stay out of that completely.
Interesting.
However, it's easier said than done. So I think it will have an effect on it, but not a major effect.
Look, and I'm not going to hold you to this. We're not going to replay this next year at this time and say, "Oh my God, he had it so wrong," or "He had it so right," or we don't have a crystal ball here, folks. We're all trying to just predict what the future's going to bring, and but base some of our predictions off of facts.
Yes.
Off what data we do have. So yeah, we'll preface it with that, right?
Yes.
Or post what you just said. Small disclaimer at the bottom of the screen: we do not have a crystal ball.
Yeah, exactly. And looking at 2008, nobody thought what happened was going to happen besides one man, and that man. He was right, but he was the only one, and he made a ton of money off of it. Yeah. So. Meridian has some, Yes.
we were talking about some first-time home buyer programs, stuff like that. And that was one of the reasons why we brought you on the show, was because a couple weeks back you had put a post out there that some new programs have rolled out. So give our buyers a little bit of an idea of what what we're going to be seeing now.
Yeah, absolutely. So there, like I said before, in the state of Maryland, there's a ton of money available for first-time home buyers. The biggest, most recent one was rolled out in Harford County called the Harford County SELP. Stands for Settlement Expense Loan Program. And basically the county of Maryland, or of Harford County, will give you 10% of your loan amount up to $20,000 towards the down payment and closing costs of your first home.
Wow.
Of course, you have to qualify, for it based on an income limit and all that stuff.
Sure.
And at some point, that money will be paid back. However, it's not paid back monthly. There's no interest on it, and so it'd be paid back at the time of transfer or refinance.
Okay.
So it's very, very similar to an MMP or a Maryland Mortgage Program product.
Yeah.
However, they're giving you more money, and it doesn't necessarily affect the rate.
Interesting.
So it's for buyers buying in Harford County, that's a new one, and like I said, it's up to $20,000, and so basically any house over $200,000 is going to get the full 20.
That's significant.
So it's a very large amount of money, and pretty much every home in Harford County is going to qualify for that.
Yeah. Because I'm just thinking, based off of previous buyers' closing costs, is that it's right around that $20,000 mark. So this could potentially cover a majority, if not all, of your closing costs.
Exactly. And the big thing about it is it can be combined with other programs.
Okay.
So the buyer can get even more money and bring even less money to the table. And what I've been seeing, it hasn't happened a ton, but over the last 12 months, I've probably had 6 or 7 home buyers who either didn't have to bring a dime to closing or ended up getting money back at closing.
Yeah.
And that's just from combining grant programs or potentially getting a seller credit on top of a grant program. So there's a lot of options for first-time buyers.
Wow. Any other programs other than that you've been really focusing on? You did mention Maryland Mortgage Program a little bit.
The Maryland Mortgage Program is a great one. The only downsides to that program is the money has to be paid back.
Okay.
And the state of Maryland chooses your interest rate, not the specific lender. So no matter what lender you work for, whether it's Meridian Bank, First Home Mortgage, DML, whatever it is, your interest rate is going to be the same.
Okay.
Through the Maryland Mortgage Program, and it's higher than you would get, normally on a normal loan, from just anywhere else.
Right.
So that's a big thing to keep in mind. The other big programs that we've been focusing on are called FHLB, so that stands for Federal Home Loan Bank.
Okay.
And that's based out of Atlanta. I believe only banks are allowed to lend this money because you have to be, within an investor in the FHLB program.
Okay.
So essentially what they do is they give the buyer money towards their down payment and closing costs. This year it was between $10,000 and $12,500. So they would get a grant. So this wasn't a second mortgage like MMP or the Harford County program. This was just a straight up grant that they would never have to pay back. It never affected the interest rate or any of that. So they would get 10 to 12.5 towards their down payment and closing costs. And that was a really popular one because it doesn't affect the rate.
Yeah.
And it doesn't, their payment is as low as it was, and there's no extra fees. And so that's the big thing with that one.
And can that be in combination with what we were just talking about?
Yes.
Yeah.
And so that can be combined with the Harford County SELP, and theoretically that could be $32,500 the buyer gets.
Sure.
So that's a big program. And then there's another one. It's called First Front Door, and it's basically the same product as FHLB, but it has $5,000 instead of either the 10 or the 12.5.
Okay.
But either way, all the programs out there's so much opportunity for first-time buyers that, if you don't think you have enough money and that's, the only challenge you think you have, then just go for it because there's a lot of opportunity. Yeah,
absolutely. Yeah, and I think, when people are going online and they're looking at online banks versus somebody that's more local, is that, someone like Tyler has their hands in all these different types of programs, and and there are different qualifications that you need to have to to be able to use these resources. But you're not necessarily getting that same level of service, say at a bigger internet type bank, and I'll leave their names out of it so they don't come back and sue me, because this podcast just generates so much interest nationwide. So we got to keep it safe.
Oh yeah.
Right. Well, lots of great information. Now, there are buyers that are going to be looking to buy in 2024.
Absolutely.
Okay. If you had the opportunity to create the perfect buyer, what advice would you give to people that are going to be taking that jump this coming year?
That's a great question. So I would say the biggest thing to educate yourselves on the housing market at this time. Things are difficult. They're not the same way they were when your parents bought a house, or even if you bought a home 6 years ago. Things are significantly different, and you're going to have to work differently in this market. And so I would say the biggest thing to prepare yourself to buy a home in 2024 is to just educate yourself on the market. You have to have an understanding of the inventory and the rates and how things are going to work at this point to be successful in this market. Because I have a lot of buyers who will reach out to me, say, hey, yeah, I want to buy a house, and they qualify, got good credit, got good income, good down payment, but they don't want a payment more than, let's say, $1,200 a month.
Yeah.
And at one point in history, that was definitely a possibility.
Right.
But that is not it is possible right now with a big down payment. But if you're a first-time home buyer looking to put the minimum down, that's just not a possibility right now.
Right.
So I would say the biggest things are educating yourself on the market and saving up as much money as you can for a down payment, so you can put more money down than the minimum. That way you have a little bit more of a palatable payment.
Yeah.
Because that's a big thing that we're seeing with buyers right now is they're excited, they want to get pre-approved. Then you get them pre-approved, send them the estimate, and they see that payment, and they're like, "Oh my God!"
Yeah,
And that's a big turnoff.
And you don't want to be house poor as a first-time home buyer. We're not encouraging that at all.
Not at all. No, the biggest thing is rates are high, and that's tough. Don't buy a house that you can't afford.
Yep.
There could be an opportunity to refinance in the future. So if you buy a house now with a payment that is really high, but you can still afford it, there may be an opportunity to refinance to a lower rate. As you'd mentioned, the market is very cyclical.
Yep.
So we could see lower rates in the future. And so if you can afford the payment at this rate, I would encourage you to buy, because at the end of the day, prices are still going to go up. And that's what we've seen over the last year and a half. Rates have been really, really high, and prices have continued to go up.
Right.
And that's really just a lack of inventory, but they're not making any more land to build on, especially here in Maryland. So what solves our inventory problem? And that's the conundrum I think we're all in at the moment.
I think that's what it is. Wish we could just grow a lot more houses, right?
Exactly, but you can't. So I think the values will always continuously go up here.
Yeah. And, real estate historically has won over the long term.
Yes.
If you were looking to buy a house and maybe move in a year or two, not the right time to buy a house.
Definitely.
But if you're going to buy and you're going to hold that, and you personally, we were just talking off camera, that you have purchased a few homes,
yes,
and you're holding them and have put some money into them,
yep,
and so you're investing through real estate. It is an investment.
Yes.
Like people sometimes are buying their first home, but it is an investment.
100%.
But historically, real estate has won.
Yeah.
Over time.
Absolutely.
And that's the key, is finding that comfortable monthly mortgage payment that is not going to make you go house poor and eat ramen noodles every night.
Don't want that.
And when the interest rates do go down, because when those interest rates go, this is the one thing that we've been really trying to push lately, is like once those interest rates do go down, more buyers are going to flood into the market,
yes,
and that's just going to drive the competition up.
Yep.
Because that we have a supply issue.
Exactly.
But if you can afford the monthly payment now at 7.5%, 8%, whatever it's going to be,
yep,
and those interest rates will eventually go down, it's not going to stay up there for 30 years.
Exactly.
Even if they don't go down next year, maybe it's the year after that or the year after that.
Yep.
But over the time period, the time frame, you're going to win.
Exactly.
You're going to win, and you're going to win because you're going to be able to get into a house now that you can afford, and then have that refinance, which is going to lower your monthly mortgage payment.
Yep.
And you won't have to compete with a flood of buyers,
yes,
that have come into the market because those interest rates dropped.
Exactly. And I always use my parents as an example, because they're the perfect example. They bought their house in Bel Air, in 2003 or 4, when right before the market crashed, but we were at like the height of the market. They paid a ton of money for their house. They paid more than they should have. And then 2 years later, the market crashed, and it was worth way less than they paid for it. But here we are 12, 13 years later, and the house is worth significantly more than it was in 2004, 2008, and all of that.
Yeah.
So it just goes to show there will be bumps in the road, but real estate always wins.
Yeah.
Always wins, because they're not making more land.
Yeah.
And so that's a big thing for me.
This was awesome, man.
Yeah, absolutely. Thank you for having me.
Tyler Spencer, if people want to connect with you and get more information, where can they reach out to you?
On social media, my name, Tyler Spencer. I've got Facebook, Instagram, Snapchat at Mortgages by Tyler, and that's about it.
Okay. Do you care to put your phone number out there?
Yeah, sure. My cell number is 443-752-5026.
Yeah. Again, I think I said it at the beginning of the podcast, don't let the age fool you. He is super sharp. He knows his stuff. And is doing great things for people and looking out for people's best interest. That's what you need in a lender. You need a good real estate agent that's going to know what the inventory is and constantly looking at the market. That's what we do. What you do, it's a good team to have people that are genuinely looking out for your best interests. So if you want more information, again, you can reach out to Tyler Spencer. If you're not following us yet, you can go on Facebook and Instagram at The Markland Advantage, as well as YouTube at The Markland Advantage. And we are on TikTok,
nice,
Snapchat, and X at TMA Real Estate, formerly known as Twitter. Do I look like an old man that just...
Well, you had it better than me, man. I still called it Twitter.
It's X now, man. Come on. Yeah. Elon called. So, but yeah, follow us there. And thank you so much for coming on the show, brother. It was super knowledgeable, and lots of great clips are going to be able to be brought out of this. And you're doing good things. Keep up the great work.
Awesome, man. I appreciate it. And thank you very much for having me.
Yep. Thank you for joining us today. And until next time, live your life to the fullest. And we'll see you soon. Take care.